Some of the biggest moves in the market happen on days when nothing has fundamentally changed. A stock sits in a tight range for a week and then breaks over 20% overnight. It's the same company, the same earnings, the same fundamental story, but something has clearly changed for it to gap up or gap down. It's not the story that's changed, it's the physics underneath that stock that has. Welcome back to the Physics of Trading. This is a 5-part course on how markets move through a physics lens. Episode 1 was all about motion. In this episode, episode 2, we're going to cover a different concept, energy. Energy is a key concept that will help explain why quiet charts can often lead to some of the largest moves. Now, a quick recap if you didn't watch episode 1. The main thing we took away, an object in motion stays in motion until something stops it. That tells us direction, but it doesn't necessarily tell us magnitude. A trend can continue while running out of fuel. To understand that fuel component, we need to understand this different concept called energy. Now, in physics, energy shows up in two different forms. The first is kinetic energy. Kinetic energy is energy in motion, like a bowling ball rolling down a hallway. The second is potential energy, and potential energy is what we care about. Potential energy is stored energy waiting to be released. A boulder at the top of a cliff, for example, has potential energy. A stretched spring has potential energy. Nothing is moving yet, but when that energy is released, that stored energy is going to be converted into motion. Now, that conversion is the key. Potential energy doesn't remain stored forever. That tension eventually resolves. For example, in the case of the boulder, it falls, or a spring, it'll snap back, or the rubber band will eventually release if you try and stretch it too far. It's different systems, but it all has the same underlying principle, which is energy in, motion out. Now we apply this to a stock chart. A tight range stores potential energy. The longer the range holds, the more and more this energy is building, and the larger the eventual move tends to be. If you picture a stock sitting in a tight range for a week, on the surface, nothing is happening. However, underneath the surface, buyers and sellers are in balance right now, but pressure is very clearly building up on both sides, especially if there's volume, given that price is not moving. That's the storage phase. Now time passes and eventually that energy resolves. You can actually observe this real time and you don't need to look any further than Intel. This is a stock that's been in play in recent history. On the daily chart, you'll see that the triple pro squeeze indicator turned from red and yellow, where you can see these squeeze dots signaling to you that energy is being compressed. That reflects contracting range and falling volatility. When that move begins, when the actual conversion phase happens, so this potential energy is now being converted into actual energy, you'll see the squeeze firing with this green dot or the cyan bar, in this case with both of them. When, in this case, the cyan bars start to expand, you'll see the transition from the stored energy to now motion. So the squeeze went from storing all of this compression, all of this energy, to then converting that potential energy into motion. Now you look at the same chart, but this time on a weekly time frame. It's the same exact structure, but slower. Daily compression usually plays out over a few weeks. On a weekly time frame, so now you're looking at weekly compression, this can oftentimes take months or even longer. But the pattern itself doesn't fundamentally change. You have compression first, and then you have this compression being converted into the energy being released, which is the expansion phase. That's what tools like the Triple Pro Squeeze and the Slingshot Squeeze indicator are designed to track. They monitor compression across multiple time frames so you can identify some of these setups before the actual breakout happens, not after. And remember, the breakout is the conversion of this potential energy. The same dynamic also shows up in implied volatility. Before earnings, for example, implied volatility will start to compress as uncertainty builds. Price action tightens, looks a little bit quiet, but it isn't necessarily inactive. It's just waiting for this mechanical release. Direction is the thing that's unknown. Now, this isn't just some theory, you'll see this play out time and time again in stocks that when you think about them, you don't necessarily expect them to be these aggressive movers, if you will. Let's come back to Intel. This is a great example. Intel sat in a $20 to $25 range for almost 2 years. Think about that, 2 years of compressed price action where people had written off Intel entirely as a stock that you should be trading at all. Now, when that base finally broke, the stock moved from $25 to $99 in 9 months, and you can see that a majority of this price action has taken place in just the last 4 weeks after that weekly squeeze fired. You look at Dollar General, another example, dropped 32% in a single session on a quarterly earnings miss. Boeing, another example, broke down after the door plug incident and since then trended lower over the following year. Now, you might think that this trend down lower makes a lot of sense given the news story, which yes, but we're more concerned about the volatility and the way that the energy is being released. Take a look at Verizon as well. Verizon based around $30 for months, and then it moved 43% higher in 3 months when rates shifted. So a catalyst, but again, all of this compressed volatility, all of this compressed energy finally having an avenue to be released. Procter Gamble, another example, traded sideways for nearly a year and then finally broke out, moved over 60% over the next 12 months. Why does this happen? These aren't high volatility names, but they all follow a very common and similar pattern, which is compression first, then the conversion and release of this energy, which then takes us to the expansion phase. One tends to continue, but the other often stalls. Now, keep in mind when you're looking at volume over the period of, say, 2 years in the case of Intel, you need to be looking at volume on a zoomed out basis as well in order to not be swayed by the noise of what would be considered the daily time frame charts volume. Now, the same concept of energy also adds a little bit more when you start to bring it to the opening range breakout setup. The opening range itself reflects energy conditions if you think about it. A wide range suggests that energy, for the most part that came in from pre-market, has already been released, especially if, say, today's opening range might be greater than our average range. Inside of our opening range breakout platform, we make it really easy to see is today's range about the same, less than, 2x our normal range? That gives you information about the energy and what has already been processed from pre-market. Now, a narrow range suggests that energy is still building. It's the same setup, but now you have different context, applying the same energy context. But now, if you had this narrow range with an opening range breakout setup, oftentimes we've found higher win rates, and we've also found some nicer win to loss ratios with risk to reward skewed on our side, where you're risking one to make two. Why is that? Again, you're riding on this energy concept. You're riding on this relatively compression phase of energy, then being expanded and riding that expansion. Now, this is where I think the consistency in your trade results can come in and where you can borrow from this physics concept of energy. When you can read quote unquote energy on a chart, a lot of these large moves stop feeling so random. You hold on when there's participation and you'll exit when it fades, and it becomes a lot easier to understand which direction energy is taking the trade so you can trade in the direction of energy. You avoid forcing trades without the underlying support backing whatever move you're looking at. Thinking about energy also really helps if you're a squeeze trader to help bring together the complete picture where you're understanding the compression of that energy and how that compression is eventually released and how to make sense of the squeezes across different time frames. Now, the last concept that this ties back to is volatility. Volatility is effectively a measure of the energy in the system. That's why our volatility box models, for example, focus on potential movement as opposed to direction. I don't really care about predicting if we're going to break out in one direction or the other. I'm more focused on trying to make sense of this volatility where we can figure out, okay, this volatility that has expanded in one direction or another, where is it likely to find some support or resistance in this expansion stopping, and what is the overall bigger picture energy based off of either the daily time frame charts or the weekly time frame charts. Now we put all of this together, so the first episode and the second episode. what do we have in very simple takeaways? 1. Trends represent motion. And 2. Ranges represent stored energy. Most price behavior fits into one of these two states. They're either trending or they're range-bound price action. Now we have 3 concepts left. In our next video, episode 3, we're going to talk about the concept of oscillation, why some markets move back and forth instead of trending. In the 4th episode, we'll talk about temperature, and finally in the 5th episode, we'll bring everything together by talking about phase transitions. For now, the key takeaway for episode 2 is simple. Quiet charts aren't inactive, they're in a state of buildup. When you see something in a tight range, the relevant question you must ask yourself is how much energy is being stored and how it's likely to resolve. See you in the next episode. I hope you're enjoying this series so far, and I'll see you in the next episode.